Hello. Welcome to our next chapter, that is your tonnage taxation. Now, your tonnage taxation is basically your ships. So, if there is an Indian company, if there is an Indian company whose poem is in India, what is your poem? That is your place of effective management. This we will study while we are doing your international taxation. So, Indian company whose place of effective management is in India and they operate ships. And if it owns at least one ship, that is, if it has to own at least one ship, then tonnage taxation will be applicable to them. So under tonnage taxation, how do you calculate income that your ship generates? So that will be based on income is your daily tonnage income into number of days the ship has operated. Your daily tonnage income. Now, how do you calculate your daily tonnage income? That for that purpose we are using the table below. That you have to multiply by number of days the ship has operated. Do not forget this part. Okay, so you have to multiply by the number of days. Okay, so if ship with tonnage is basically weight. So if it is up to 1000, then in such a case, your there are two cases. One is fixed and one is your variable. So daily tonnage income, your daily tonnage income, that is your this part that I was telling you, the first part. Okay, this is your daily tonnage income. So your daily tonnage income is up to if a ship's tonnage is only up to 1000, then in such a case it will be rupees 70 per 100 tons. This is 70 per 100 ton. Okay, this is your income per day. 70. If it is from 1000, it is more than 1000, but it is up to 10,000. In such a case, your fixed will be 700 and your charges per 100 ton, not your charges, sorry, your income per 100 ton will be rupees 53. If it is from 10,000 to 25,000, your fixed will become 5470. Your fixed will become 5470, and it is per 100, it will reduce to 42. And if it is 25,000 and up, your fixed will become 11,770, and your per 100 will fall back to 29. So that means anything above 25,000 per 100 ton will become 29 rupees of income. Okay. Now your what you have to do, your tonnage will be rounded off to the nearest 100 tons. For example, if your ship's tonnage is say for example 1023. So in such a case, to round it off to the nearest 100, this will become 1100. 1100 means it is from 1000 to 10,000, correct? So it will be 700 plus 53 because there is extra 100 tons, correct? So above and over and above 1000, it is only 100 tons. So therefore, on 100 tons, we will charge 53 rupees. So your total will come to 753 rupees per day. 753 rupees per day, multiply by the number of days, and you will get your income. Now, tax will be at normal rate plus surcharge plus test. Of course, if it is applicable, that is whatever the rate that has been defined to the companies. Your WDV of qualifying ships, your written down value of qualifying ships is your WDV of ship as per your book, as per your books of accounts upon your total WDV as per book. That means what proportion of your WDV of your total assets is your WDV of the ship. That means this is just a ratio, that is WDV of ship as per book upon total WDV multiplied by WDV as per income tax. That is your total WDV that you have for income tax. That means that portion. So first you calculated what portion of your WDV of ship is your total business. Then you multiplied this with your total WDV of income tax. That means this proportion of my WDV of my income tax. WDV as per income tax is my WDV of tips. Now there is a MCQ in the ICA MCQ booklet. Therefore, this formula you have to do. That is a minimum reserve requirement. They have to keep some minimum reserve under section 115 VT. That is 20% of book profit under section 115 VT. So now any shortfall taxation, if you have not been able to maintain that, how will the shortfall be calculated? Your shortfall will be calculated as percentage of shortfall upon percentage to be maintained. You are calculating a ratio that was by how much? By how much did you shortfall? For example, your shortfall was 1% and the percentage that you have to maintain was 20%. That means you shortfall by 5%. That means 5 by 100. 1 by 20 is nothing but 5 by 100 into profit. You will multiply it by profit by both core and incidental. That means your core business and any incidental profit also, everything you will add and you will multiply that by your profit. And by this you will get how much will be my shortfall taxation. And with this we are done with this part, and I'll see you in the next one, that is cash loans, deposits and advances.